Hello, this is Dave, and welcome to Equity Story. And just before I start, this is just a general share advice and not personal advice, as per the disclaimer. Oh, what a! I think I made myself too small. I don't want my head to be that small. There you go. Um, let's talk about the markets, and I think the interesting price action was on the Nasdaq, and I think so far this year we've really seen the Nasdaq lead the way. It was really the first one or the first major indices in the States that started falling, and it's going lower, and it's just broken some previous lows which had back in June, and for me it's a sort of pretty bearish sign. And I think by the end of this week, if this Nasdaq is still below those levels, I think again it's a good indicator that these markets are going lower. There's oh sorry, um, then again if you look at the Dow, really it's trying to recover, but actually just a really perfect pattern to then uh, uh, really fall over and come lower over the next 3 or 4 weeks. Um, a few people are sort of, especially I think we've got a few trialists who are looking at this, they're looking at the markets, and they're saying, really, why do I want to be looking at shares, and why do I want to be getting involved in shares? This is the most exciting time ever, really, to be looking at the market because, when the markets tend to go down, it tends to be fairly quick. I mean, not as quick as what we had in the COVID fall, where it just collapsed, as you can see back here, but it will go down, and it tends to go down reasonably fast. But there's that opportunity to start accumulating the stories. So, if you're watching this video and you haven't bought shares before, you've never been in the market, you're quite right to be scared, but also be excited because the opportunities are definitely coming. Um, there's more news overnight, more issues. Again, the Bank of England have been supporting the bond market to hopefully stop a number of these pension funds going under. They've said they're going to stop doing this in about 2 or 3 days. So they said to a bunch of pension funds, you need to get yourself in order. Um, I don't think they can do that in 3 days. So I don't know what really Bank of England's on about. But there's just a lot of other issues around the market at the moment. And yes, we're going lower. We've got the CPI numbers coming out, and that's Friday morning our time. So maybe if the inflation doesn't look as bad, and maybe those CPI numbers are a little bit better, it might give the market a little bit of a boost, a little bit of a rally. But I'm sort of doubting it at the moment. And you look at the job numbers, and you look at the general inflation around the world, there aren't really much signs of it easing at the moment. So I think, chances are down we go more and more. There's a stock that I've talked about before, and it's the old Facebook called Meta. Well, it's Facebook, it's now called Meta. And it's an interesting story. And the reason being is that the big amount of the investors in Meta are institutions, not mums and dads. So often it gives a very, very good indication, Meta, of maybe where the market is heading. And it's trading on a really low P at the moment. And some people, calling it a buy actually around here. But look at that price action. It's actually collapsed lower than the COVID low. Very interesting, and we've often talked about this, doctors. Yeah, have a look at get Meta on your radar because I think it's a really also another really good indicator of where these markets could go. And if you look at Meta there, it's certainly it's back down to those sort of 2017 levels, and if you look at that, possibly going a little bit lower, maybe even as low as that 100 mark. Um, so, Dave, doom and gloom, give us some good news. Well, again, it's the same old stories, isn't it? We've had some. I'll bring these over here so you can have a look. We had St. George, a little lithium play, because saying they've got some high grade lithium mineralization. Um, I think generally speaking, you want to be over 2. If you get 3, 4, it's even better. I don't know if I'd call it high grade, but it's certainly not disastrous. Um, so maybe that 2.72 is fairly high grade. So there's a little bit there of high grade. So Okay, I get the idea where you can put that in your headline. Um, and and you can see, having a little bit of a move today, SGQ. But would you buy it? When you're looking at charts, if you're going to play this space, if you're going to play the lithium space, you know, you've got to buy a really good chart. And for me, the chart's just not strong enough. I mean, yeah, it's having a little bounce up. Had news here, it's had news there. You could trend it, might go up a little bit more, but I just think there's better stocks to trend at the moment, and I wouldn't be investing in it. Again, DRE is another one that, again, rare earths. It's a really good little rare earths project. This, and again, coming up with more and more drill results. So, how do you play this? Well, I think it had that normal explosive pattern, which is actually the CTM guys will know that's an normal exhaustion pattern, and it's just coming back to trend. If you're in this, you're holding it. Would you buy it? I think if you like the rare earth space and you saw this find a bit of support and then turn back above 10 cents, then I'd buy it because I think the story is reasonably good. The only issue is, of course, we're just going to have a horrible. We know, we feel that October, November are just going to be a very, very tough place in the market, and maybe it doesn't matter how good some of these stories are, they're just gonna struggle a little bit in this environment. Um, some one of our sort of dividend plays, CQE, again confirmed its distribution guidance of 17.2 cents per unit, and the real estate trust also acquired 25% interest in Geoscience Australia property. Uh, so it says here CQE has partnered with two other Charter Hall managed funds to acquire the social infrastructure asset. The property was purchased for 90.9 million on a 7.4% initial yield, a 9.6 year WALE, a 3% fixed annual rent increases, and a net lease structure where the tenant is responsible for all outgoings. Um, so, again, sort of confirmed guidance. We're just looking for our dividends. As long as our dividend is safe, um, you know, I think we're happy to be holding the story. Um, and again, it's sort of below the short-term trend lines, but there is a lot of support back here at $3, and I think if you're in it, you're still holding it. CRN, which that's the move we had last week. Well, hello, they come out today and said they're chatting with Peabody, which was one of the biggest coal producers in the USA, of some sort of tie-up. I don't know. One would think Peabody so would be really looking to maybe acquire CRN. It'll be really interesting to see what comes out of those negotiations. But, what did we get last week? You know what we always say, the charts are never wrong. Little big green candle. Hello, put it on Einstein's. Let's get in. Something's happening here. And we've got a story. And I think earlier today, it's actually up 8% now. And I think even earlier it was up a tiny bit more. So, um, again, just a hot space at the moment. And, you can understand why Peabody might be talking to CRN at the moment. Bank of Queensland. Um, I thought this was actually quite interesting. So the market is, good old Bank of Queensland. They lifted their dividend, but they are having margin pressures, and they said here they've got a 5% decline in cash profit for the full year to 508 million. But they've lifted the dividend, so keeping everyone happy, and the market is rejoicing that. And again, these banks, and I think you've got Wolf, our lead analyst, has got ANZ as one of our dividend plays. Yeah, we understand these banks. You're not going to make any growth on them, but in these really hard, difficult times where you can just close your eyes and you've got your little safe dividend, I get it. So if you're in these banks and you're in there for the dividend, even though they've got a bit of margin pressure, they're again delivering, aren't they, with some pretty good dividends. I think a lot of their problems were a lot of the mortgages they had were on 5-year or fixed terms, and of course with these interest rates going up, those fixed term mortgages that some of the banks have been dishing out over the last 3 or 4 years are starting to bite a little bit. Um, I thought CSL came out with an announcement which was, I thought it was really good actually. I mean, they've come up with a net profit after tax between 2.4 billion and 2.5 billion, and a growth of 10 to 14% on a like for like basis. So, um, you know, if you're in CSL and you're that long-term holder, doesn't really give you any reason to get out. It's not trending. It's most probably going sideways. It could go sideways for another 2 years. So, I mean, I'm too short term. I mean, if you speak to the Claude and Wolf, they'll be happy to hold their CSLs, and they've got that long-term view over 5, 10 years. Absolutely get it. For me, it's just looking sideways, boring. I just want to get out. Maybe there's going to be some time in the next year or two where I'm going to see a little breakout of this. I'm going to see a better chart, and I'm going to be a little bit more interested in it, and I'll get into it. But fully understand for those out there that like these long-term plays, CSL, why wouldn't you hold it? Again, it's a pretty strong announcement, and you'd think with this Aussie dollar going lower and lower, they'd be doing, they'd be doing even better. And that gets back to some of these coal plays like NCM, and you saw coal down again. Sorry, gold down again overnight. But hello, um, these guys with the cheaper Aussie are just doing really, really well. So, we're gonna look at that a lot more. I think next week, especially when the wolf's back. Look at these companies that really could benefit from this cheap Aussie dollar that we've got at the moment. And again, you can see NCM. I think it could be a great trend or good trade if you're not in it. I think it's still an opportunity to get into that. Um, Here you go. Now, I was a little bit naughty because I put this Propel on as a hot stock. The reason being, I think I'm just annoyed with these all these excess deaths around the world, all these excess deaths we've got in Australia at the moment. No one's talking about it, and we don't know what's causing it. Is it the vaccine? Is it other stuff? Is it because we've been in lockdown for 2 years? I just don't know. But it was really, really interesting here, and I'll bring over the results of PFG. Here you go. There you go. And they generated revenue of 44 million, up 33%. Very, very strong. Achieved operating EBITDA of 30 million, up 40%. And here we go, performed a record number of funerals in the quarter. So, it's horrible. I don't really like investing in these sort of businesses, but it's totally outperformed the market since we put it on. And if you're in that trade or you're in it as an investment, you'd be holding it. So again, these excess deaths around the world, it's not just in Australia, it's all over Europe, are still here, and you can see companies like PFP holding up reasonably well over a very, very difficult climate. BRN, Brain Chip, had a patent approved or in the USA. Would you be buying this? Our general feeling, it's a FOMO stock. It's certainly trended. It's gone for its buy signals, and we've traded it, and members of Equity Story have traded this and done really well. But you wouldn't be trading it at the moment. It's below trend. Well supported. A lot of people like the story, but nah, I wouldn't be getting into it at the moment. It would have to get back over $1. I'd have to see a bit of a swing, and then maybe I'd have a look at it. Coal overnight still strong, looking very, very good. And if you're in these coal trades, you'd be holding them. Look at Whitehaven again, up another 3%, looking absolutely superb. SMR, looking very, very good. So again, you can just see these coal plays are absolutely performing time and time again. So really, is there sort of any stock at the moment you'd look at and say I'd get into at the moment? I think if I was going to trade something, I think it's in the right place. I think this one looks good. Stanmore. I think you can have a trade on this one. I'm going to put a trade out today. What about that? Okay, let's have a look. SMR. We're going to trade this. We're going to have a tight stop on this, and little bit. I'll give you a little bit lesson how you do your stops. So here you go. Where we're going to go. We're going to go halfway through that candle. I'm looking right, and I might just go for that high or that close a few weeks ago, which was I'll go for the high 249. I could have a nice stop at 247. I'm going to have a tight stop. This market is a little bit crazy. We're going to have a buy at 270. We're going to target, $3, and maybe we've got a nice little risk reward. So a little trade we'll put out there. Again, what we're trying to do, we're just trying to trade the sectors which are moving up. And these coal sectors are doing really well. What I would warn overnight, guys, just be a little bit careful. Iron ore. So you tend to get nervous when iron ore starts dipping under 100. And again, it's been quiet because the Chinese have been on holiday. So you've seen the iron ore price really just doing nothing for a while. But there's the iron ore price. It's down slightly again. And if we can have a look at the iron ore chart. Uh, let's put it on a weekly so we can see it a little bit better. It's just starting to look a little bit weak. And, if we came back and revisited these sort of this $63 or around this, which I think is, or even that low recently, which was 82, I think you might see some of these iron ore plays like might not be helpful for the BHPs, the Rios, the FMGs, which in the short term could see a little bit of weakness. So just be a little bit careful with those iron ore stocks. And again, you are seeing a massive slowdown, a massive sort of property crash in China, which isn't helpful. And although the Chinese are stimulating the economy by doing a big infrastructure spend, I'd just be a little bit careful with those iron ore plays. And you know what? If you've got them on the charts, use your stop losses, look where they are, and if you've got that sort of medium to shorter term view, maybe I'd be getting out of them if they broke any trends. On that note, let's give SMR a go and have a good day. And I'm looking forward, obviously, next week to have my lead analyst back to argue things out with him on TradeWatch. But even more importantly, on Friday, guess who's back? Andrew Page, unbelievable analyst. So I've got Andrew. He's with us on Friday. He's there to answer all the questions you've got on stocks that you own. Again, he's a little bit like Claude. He's a really specialist in that small cap space. And we can have a look at the charts and we can have a look at the trends. And maybe we could have some interesting ideas on Friday for you. On that note, thanks for listening to Equity Story and have a wonderful day. Bye-bye.